big implications for the cybersecurity industry here with all of this private equity interest. Because Fortinet has that leading role in the hardware itself, they think that they can emerge as a leader and move up that magic quadrant and compete very fiercely with Palo Alto Networks.
Welcome back, everyone, to Chipstock Investor. Today, we're going to be talking about one of our favorite segments of the industry, cybersecurity. Fortinet recently released their earnings results, and we're going to discuss that, but we're going to also talk about the cybersecurity industry at large. Now, we're not the only ones interested in the cybersecurity industry. Private equity firms have a very big interest in cybersecurity companies. This is Thoma Bravo's acquisitions in the cybersecurity market in recent years. Some of these companies they've now gone on to sell to other private equity firms, but you can see Barracuda, Ping Identity, ForgeRock were all acquisitions made within the last few years. One of the latest acquisitions that Thoma Bravo is making, they're in the process of acquiring Darktrace.
Yeah, that's right, Casey. And you can get up to speed on all of these companies, most of them in this list, cybersecurity software providers. Get up to speed on what they do in our cybersecurity industry manual that we put out a couple of months ago. And of course, it's not just Thoma Bravo, which is a giant in software private equity. Francisco Partners has also been busy in the last couple of years. Again, lots of software acquisitions being made here. New Relic and Sumo Logic, both in the analytics software space, which is the cybersecurity adjacent space, part of the software industry. Lots of overlap between analytics and cybersecurity for obvious reasons. And the latest news from Francisco Partners, as well as Clear Lake, is that someone is finally taking Synopsys's software integrity group private. So Synopsys just announced this week they are selling that software integrity group, or SIG, for 2.1 billion, upwards of 2.1 billion, to Francisco Partners and Clear Lake Capital. Synopsys, as we've covered in recent months, refocusing its attention on its core software competency, that being semiconductor design. It's in process of making that mega acquisition, mega merger with Ansys that we covered a few months ago here on Chipstock Investor. But big implications for the cybersecurity industry here with all of this private equity interest. Of course, we have Cisco that just acquired Splunk. They just completed that. HP Enterprise also in the process of acquiring Juniper Networks on the cybersecurity networking side of the equation. It would seem a lot of big money thinks that there's a lot of value to be had in the cybersecurity space. If you take a look at all of the cybersecurity companies, especially the publicly traded ones that we outlined in that cybersecurity manual, you'll see that a lot of them are not profitable. So private equity, big tech, looking to plug those into their ecosystems and probably whittle them down to their most profitable core. There's a lot of competition in this industry. And that brings us to the other reason why there's so much interest. It's not just the potential for big value creation, but this is a high growth, secular growth trend, isn't it?
Take a look at our cybersecurity industry bubble chart. You can see that network security is valued at around 65 billion, cloud security 60 billion. Those are the two biggest parts of the industry. But as a whole, we expect around $215 billion in annual global spend just this year. Look at the growth rate. The annual growth rate is expected around 12% each year the next 5 to 7 years. Massive growth for the cybersecurity industry.
And that makes sense if you think about it, Casey. Of course, the network, and now by extension, the cloud. We'll talk about the overlap between those two here momentarily when we discuss Fortinet. A lot of businesses still migrating to the cloud. A lot of businesses, especially older parts of the economy, big industrials, basic materials and such, still actually just implementing IT services, integrating those into their basic operations. And then, of course, when the pandemic happened, you had a mobile workforce suddenly explode and get a whole lot bigger. So you have these new little sub industry secular growth trends like endpoint. That's where CrowdStrike fits into the equation here. Identity access and management, that's like Okta. And a lot of those private equity companies, what they acquired were identity and access management software providers. Big growth potential. So if you're a private equity company or big tech looking to make an acquisition and plug this into your ecosystem, whenever you have an opportunity to grow at a double digits compound annual growth rate like this and increase profit margins along the way, that is tremendous potential for value creation. And this is why investors should really be interested in cybersecurity overall. Again, check out our cybersecurity industry flow manual if you haven't already done so. Video here on YouTube, manual available over on the Ko-fi shop or on our Discord channel.
Fortinet is one of the first cybersecurity companies to report each quarter. And since it's a traditionally a hardware provider, it really helps tee up the rest of the outlooks for other cybersecurity companies as we start seeing other reports from other cybersecurity companies. Now, you remember on our bubble chart, we said that the entire cybersecurity market we expect to grow at a 12%, at least a 12% rate over the next 5 to 7 years. You can see that aligns very well with what Fortinet says their total addressable market is going to be growing by 2027. Total addressable market, or TAM, 12% through 2027. And they have it broken up between three segments: security, networking, security operations, and unified SASE, secure access service edge.
Okay, so let's start with the secure networking. That's where Fortinet got its start. It's where its top competitors like Palo Alto Networks also got their start. They secure physical locations. That could be an office, it could be a factory, it could be a store, it could be all sorts of things. But if it's a physical location and it has any sort of computer in it whatsoever, it needs security. It is, again, a topic we talked about in the cybersecurity industry manual. You could see some really horrific experiences in the last year. Like if you just so happen to be a guest at MGM or Caesars in Las Vegas last year, kind of a nasty surprise because they were really unprepared for a cybersecurity attack. You couldn't even
Yeah.
get into your hotel room because of the attack and the fact that they were unprepared.
And your information is definitely on the dark web.
Yeah, it's definitely there now. The whole internet knows that you were at MGM or Caesars last year. Yeah. Physical location security, the oldest part of this industry, the slowest growth, but still very much in growth mode. And then, of course, by extension, because this is also a type of physical location, Fortinet and Palo Alto Networks helps secure data centers, right?
Fortinet also provides cybersecurity to private data centers and networks. And this has definitely experienced some growing pains over the last several years, especially because of the pandemic. Many of businesses' workers were no longer working at those physical locations at the office. They were working outside of the office at the home. We'll show another graphic that helps you visualize where there was protection previously at those private data centers and networks. But as these workers continue to work from home, and all of us have mobile devices that are out connected to the cloud, connected to our employers, more cybersecurity issues can come up.
Yeah, that's right. So we'll get into that here in just a moment. But old network security, think of it like a castle and moat. It protects some sort of physical location. It helps monitor the traffic going into and out of that physical location. And so Fortinet builds these firewalls. You can think of it like a server, just like any other type of server that you've been hearing all about, like the servers that NVIDIA is building for AI that are installed in data centers. Fortinet servers are custom built to help protect that physical location. And Fortinet's long term strength in this particular department of cybersecurity is it's actually a chip stock. They've been custom designing their own application specific processor. They're on the fifth generation of that with the Forta SP5. And that's one of the beauties of Fortinet. It does a lot of organic development in house. And so all of its services and hardware are all built atop these custom chips and built on the Forta OS, the Fortinet operating system. So you get kind of a nice unified collection of services that are consistent across whatever product or service you happen to use as a customer.
We stole this slide from our cybersecurity industry manual. These are some of the competitors in the physical location security or firewall space. You can see Fortinet has Arista, Palo Alto Networks, Hewlett Packard Enterprise, which is acquiring Juniper Networks, Cisco, Checkpoint. All of these play in this space. And then for the private data centers and mainframes, you see many of the same competitors with the addition of the company A10.
But where we're going to focus a bit of our attention for the rest of this video is Fortinet and Palo Alto Networks, which has taken more of an acquisition heavy strategy versus Fortinet's own internal organic development. They continue to move counterclockwise across that cybersecurity industry flow and are moving into other parts of the market, newer parts of the market, higher growth areas that start to delve into cloud security, especially public cloud-based cybersecurity and software. And so we're bumping into new competitors like Zscaler, Darktrace. Again, that's going the way of Thoma Bravo, taking that one off of the public markets. So a lot of these companies, they're starting to meet in the middle between the old networking security and the newer cloud and software-based security services that are out there. What Fortinet has been trying to do is converge the two together, taking its old network security know-how and converging that with some of the software services that it's been developing in-house. It thinks it can do it because it's a leader in the actual hardware equipment itself. And again, that unified operating system that gives that consistent user experience, regardless of what product customers are using.
This chart illustrated by our friends over at Main Street Data, you can see the huge growth cycle in 2021 and 2022 for Fortinet specifically. In the wake of the pandemic, customers went through a huge upgrade cycle in products. That's the dark blue bar that you see there. Since that time, when all of the upgrades were made, you can see that the product segment continues to shrink. And it's actually getting replaced by the services, taking a larger percentage of the revenue for Fortinet.
So let's talk about that because huge hardware based growth cycle the last few years. Now that hardware it sounds like it's stabilizing, but not going to be a high growth segment like it was the last few years going forward. That's not anyone's expectation. It's not Fortinet's expectation, certainly not our expectation. Let's just assume that part of the business will stabilize and grow at, let's say, a mid single digit percentage average growth rate in the next 5 to 7 years, the slower end of the cybersecurity market. But services, you'll hear a lot of the newer cloud software security providers talk a lot about how software based services are the future. As these IT networks get increasingly complex, you have a lot of businesses that have these old IT networks based in a physical location, but now they're having to make more use of the public cloud. That data is getting distributed across edge networks. So you have these smaller data centers that are popping up closer to their users. As we kind of move around the industry flow here, things are just getting more complicated. And the way to solve for these different pain points and to cover all parts of an organization is via the flexibility of software. We're going to go through these really quick. These slides are from tech researcher Gartner. Great research on the leaders in different segments of the cybersecurity industry. This is, again, the legacy network and enterprise parts of cybersecurity. Fortinet, a top leader in both of those. It's also begun popping up in some of these more software based or software defined security services. Casey, you put a nice short together for us last month that briefly touched on some of the recent changes in these Gartner Magic Quadrants that show Fortinet popping up for the first time in Security Service Edge. That's where Zscaler, a popular cybersecurity stock, plays a very large role. And then this other one, SD-WAN, software defined wide area network, Fortinet, a leader in that. So you can see Fortinet often not talked about as a leader in software. You usually end up hearing about Zscaler and CrowdStrike and other cloud-based and cloud-only based providers, but Fortinet definitely popping up here. Check out that short that Casey made. But we introduce all of that to get to this point here, SASE, which you mentioned a few moments ago, Casey, Secure Access Service Edge.
Yeah, take a look at this quote from CEO Kinsey on the earnings call. He said that Fortinet is the only vendor recognized in the Gartner Magic Quadrant report for security service edge, SD-WAN, single vendor, SASE, network firewall, and enterprise wired and wireless LAN infrastructure. Ultimately, SASE combines all of these different types of cybersecurity and technology into one product. On our website at chipstockinvestor.com, Nick actually posted about this regarding this segment, SASE. You can check out that blog. We'll make sure that we post the link here in the video.
Now, we're introducing all of this because this pivot from some of the older networking business where Fortinet sells the hardware, maybe there's some software services attached to it that gets turned on after the customer installs the hardware, making the pivot away from that towards this new SASE service where there's a lot of interest, where the industry is headed, this combination, this convergence of the hardware and the software into one unified service. And because Fortinet has that leading role in the hardware itself, they think that they can emerge as a leader and move up that magic quadrant and compete very fiercely with Palo Alto Networks. And the reasons why, again, Ken Z says on the earnings call, Fortinet has the unified operating system, FortiOS, that combines all of those different parts of what makes a SASE service unified, truly actually unified on one single operating system. Second, because Fortinet has the old networking hardware business, not all customers may want this deployed in the public cloud, which is what Zscaler does with its secure service edge and in many ways what Palo Alto Networks and other SASE providers do. They deploy it into the public cloud, but maybe you want it deployed on premises. Maybe you have an office location that you do not want hooked up to the cloud. So there's some flexibility there. And then finally, because of all of that, there's a great deal of flexibility in what types of hardware can be secured by the SASE service.
You may recall that in Palo Alto Networks earnings call in the last quarter, CEO Nikesh Arora said that they are giving some of their products away to their customers so that their customers can make an easy transition to them. Ultimately, what that sounds like and what investors read that as is that Palo Alto Networks is giving away a lot of product for free. And there was some worry that this would hit Fortinet. And that appears on the surface to be what happens. But let's take a look at the numbers and read between the lines in the most recent earnings report for Fortinet.
Yeah, what you ultimately see here is revenue up in the first quarter, 7% year over year. Pretty sluggish growth. But again, remember, it's the product revenue down 18% year over year. That is what is hitting Fortinet here. It's the older network security coming off of that peak in 2022 as customers wrapped up the massive infrastructure upgrade cycle in the wake of the pandemic. That falling more than offset by the growth in services, in more software based and recurring revenue streams, up 24% year over year. So, not a bad quarter considering this big pivot that is now being made to re-emphasize the service and software part of the business, including especially the new SASE network that's being built. Now, Casey, billings. Let's talk about billings, that very top line item here, because this has been the discussion now for coming up on a year now. And now we finally see billings declining 6% year over year. This is actually in line with expectations. And this has ratcheted up the worry again that Fortinet is actually getting hit pretty hard by Palo Alto Network's very aggressive price war.
Before we talk about the specific billings numbers, let's talk about what billings are. Billings are future commitment to spend on a product or service, and the customer has been invoiced, but the payment has not been received. So that's what we're talking about when we're talking about billings. Okay, let's go back to the numbers. Once again, we have a chart from our friends at Main Street Data. You can see the billings trend mostly going upwards in the last few years, but then a significant drop off in Q1 of 2024.
Yeah, that's right. And again, this is important to focus on right now because it paints a not so great picture for Fortinet right at the moment. Seeing those billings decline indicates that the business is expected to lose some steam. Now, the good news is the second half of the year, management is forecasting a return to billings growth. So that's the good news. They have always said now for several quarters that we're in this soft patch for billings. And the reason is because of the hardware sales. All of this has to do with the old network hardware, network security business. They're pivoting away from that in the midst of this downturn and refocusing their attention on that SASE service. Now, we have a bit of a lag as a result of that, where the billings are declining in part because of the lower actual sales of the hardware and Fortinet just repositioning its sales team. And you can see this show up in other metrics as well, Casey, like CapEx, the purchase of property and equipment. So after this incredible run of growth the last few years, Fortinet has had to make very, very little in the way of capital expenditures. Now they start talking about building this new SASE service, which is a software based network security, cloud security service. But there is still ultimately hardware somewhere out there in the world that operates this. And you can see that big CapEx explosion in Q1 2024. They dropped 222 million in Q1 alone. Obviously, they're deploying some hardware to gear up for this new SASE service.
And we have talked about this before. This SASE expansion is tapping into Google Cloud's already built POPs or points of presence in data centers around the world. You can see that they have a massive presence as you would expect from Google Cloud. While this may mean a hit to the profit margin for Fortinet in the near term, its partnership with Google is a strong one.
And in the meantime, if you own Alphabet stock, and for one of the reasons you might want to own Alphabet stock is the incredible growth and profit margin expansion at Google Cloud. If you happen to hold Fortinet stock, Alphabet, kind of a nice little hedge against some of the temporary headwinds that Fortinet is facing. Really nice, strong partnership here and complementary portfolio positions in our opinion. Okay, let's kind of wrap this up and bring it full circle, Casey, because you said Fortinet was a good company to start earnings season with, not just because it's the first one to report, but take a look at this metric. This is an incredible metric. You'll actually see a lot of leading tech companies, like high quality tech businesses with similar return on invested capital charts like this as of late. Had the massive growth cycle during the pandemic, a subsequent bear market after that. A lot of these companies pared back expenses. And because of that, they're now getting this incredible return on invested capital. That is the profitable returns on investments that they have made in the past. So Fortinet at this point, the last trailing 12 months through Q1, we're looking at 125, 150% in return on invested capital. Obviously, that metric is not going to hold going forward because they are now making new investments again with some of their cash. Like we showed the CapEx that kind of shaved off some of the free cash flow in the last quarter. So ROIC not going to stay elevated like this. but it illustrates why private equity sees so much value in the leading cybersecurity companies. If they can kind of patch together a little network of cybersecurity companies for themselves, or if you're another big tech company like HPE buying Juniper Networks, Cisco just acquiring Splunk, you can see some of the payoff here if you can replicate something even remotely similar to what Fortinet has pulled off the last few years. It can lead to some massive shareholder returns. Now, in the interim here, we are still in the midst of this slump. Although we said before, Fortinet management fully expects a recovery to begin the second half of this year.
On the far right of this chart, you can see the full year 2024 guidance expected between 6.4 billion to 6.6 billion for billings. That would be a 1.6 year over year growth. And then the revenue year over year growth at 9.2%, 5.7 to 5.85 billion in revenue growth expected for 2024. And we'll make a note here that the adjusted earnings per share guidance was actually raised to $1.73 to $1.79, implying a growth of 8% at the midpoint. It previously was 165 to 170 for the year.
Yeah, so it looks like the bottom is in for Fortinet's down cycle. If you look at it on a trailing 12-month basis, it's not a cheap stock, even after the shares have gone through a very, very volatile patch. That's the last slide we're going to show you here in a moment. But 38 times trailing 12-month earnings, 27 times free cash flow as of this recording. Market close on May 7th, the share price of about $59.50. But that's on a backwards looking basis. We're in the midst of a downturn. And if Fortinet generates healthy returns on its investment, like it has in recent years, 20, 30%, this is probably not as expensive a stock as it would appear if you just look at it on a backwards looking basis. Along the way, in addition to generating that very healthy growth, Fortinet has begun repurchasing stock. In recent years, they didn't repurchase any stock in the first quarter of 2024. They didn't last year at the same time either. It's probably just timing of their cash flows, as well as that big CapEx spend that they had, $222 million to help build out probably that SASE service. But we fully expect they will continue buying back stock as they see that as a prudent use of cash going forward. Lots of cash on the balance sheet too, by the way, $3 billion offset by just under $1 billion in debt. So, Casey, final word on this. The last 3 years have looked really ugly if you're just looking at the stock price, but probably not telling the whole story.
Yeah, absolutely. And you can see from the stock chart that it's tanked once again and gave back some of those recent gains. But we have a full position in Fortinet, and our plan is to just continue holding at this point. If we see another downturn over the summer months, it's possible that we'll take a nibble. We're still committed.
Yeah, absolutely. Excited to see how that SASE service unfolds. They had said 24% of the new billings that began to roll in the first few months of this year were all related to that new networking and cloud convergence service. Exciting times for Fortinet. Things aren't all bad. This is just a normal cycle for this business that has a very long track record of established growth.
All right, that's a wrap on this cybersecurity industry update. We'll have more reviews as some of Fortinet's competitors and some other software and cloud cybersecurity providers report their earnings. Make sure, if you haven't checked it out yet, check out our cybersecurity industry manual for 2024. You can find that over on our Discord channel if you're a member, or over on our Ko-fi shop for sale a la carte. Speaking of that membership, it's only $5 a month and gets you access to some exclusive content, great chats with our community of members. And again, all of our manuals and video notes are posted, included in that price of $5 a month. Make sure you've subscribed to the channel. That really helps us out. It's a free and easy way to support us here at Chipstock Investor. Nick is wrapping up the final touches on our quantum computing industry manual. So we should have that out to you later this week, if not early next week. So make sure you stay tuned for that and have your notifications enabled so you don't miss a video. See you again soon at Chipstock Investor.